So let me I'll start recording, and I just want to review this. You got this video, correct? Okay. Oh, I should have asked you, how long have you been trading? And what kind of success, well, how have you been doing for the past 6 years? Right. Are you trading a large account, a small account, or? Uh-huh. Right. You'll normally what happens is that you'll find real consistency when the markets are trending well. And when they stop trending, then what happens is that often is you keep trading the way you still were trading when the markets were trending. And then that's when you start giving back your profits because they're not behaving the way they were before. But in your mind, you're still trading that way. And the whole idea is being able to recognize when the markets are trending, not trending. They only do three things. Okay, they trend, they consolidate, and they reverse. Other than that, the markets, that's all they do. So being able to recognize where the market is heading, that's really important because that will really cut the losses. If you understand, oh wait, what is the direction of a currency? And we'll start right now. Well, let's just pull up the chart. And this is easy. The turnaround Tuesday I wanted to show you. We're going to be using the stochastics indicator a lot. And we're going to be using the 4-hour and 1-hour chart. Okay. And I'll just show you just a very simple method how I determine what is the direction of a pair. So we're looking at the pound yen. And the first thing I do is I'll go to the daily chart. Okay. Looking at the daily chart, and I notice that we're in an uptrend. Okay, how do I know that? You need to find the swing points. Find swing points. Are you familiar with swing points? Okay, swing points are very important because they will tell you what direction the market is going. So what I do is, there are fractals. I draw these, but you can load them. There's a template, an MT4, and you can find them. Now, so these swing points tell me where is the market. You have to, because the daily chart is the most significant, the most important time frame. Then you definitely need to be looking at your daily chart every day to remind you where is the market heading. Okay, what is the market flow? Well, from here, the market flow all the way back from, let me see, this area down here was back in June of 2004. The market was in an uptrend. And yes, it dipped, but we were continually having higher highs. Okay, then it reached that 148.30 level and it kind of stalled out. That was, okay, and then from here, from this swing point, if you notice the swing point right there, that swing point was broken. So we were essentially in a downtrend. In February, all of February in a downtrend. But what happened? The market turned around and we were still in a downtrend until here. Here's a swing point. That swing point was broken, so now we're in an uptrend. So this is so important. You need to look at your daily chart. Where is the direction? Are we in an uptrend or in a downtrend? Well, it broke the swing high, so we're in an uptrend right now. It's finding support. Now, if it breaks this level down here, that 141.96, then we're back in a downtrend on a daily chart. So if, for example, this area here, let me highlight it. If I know, I'm looking, this hasn't happened yet, all this here, but let's say we're looking at this level here, and a swing point was broken here, which confirmed the uptrend. And we're gonna, don't worry if you don't really cannot digest this, because we're going to be going over this for a whole year. Okay, so it's not. It's unlike other courses that you really have to pay attention because you just spent $1,000 and it's a 3-day course and you're scrambling to take notes. You don't have to worry about this because it doesn't even matter. First of all, everything is recorded. Second of all, we're going to be going over it over and over, and it's the only way you can learn how to become a successful trader. Any other way doesn't work. Courses do not work. Okay, you come out of a course after 3 days and you feel pumped and feel confident and you think you're a professional trader, and you're going to be sorely disappointed. Okay, so here we're in an uptrend from here. So here, this was November the 21st, right? So November 21st all the way up till about even here, the February, we're in an uptrend. So as long as we're in an uptrend, okay, and let me just change this. I'm just going to put this level. As long as you know we're in an uptrend in a daily chart, all you need to do is go to the smaller time frames for your entry. If you just did that, you will eliminate 90% of your losses. Okay? That's all you need to do. All you need to do is go look at your daily chart and figure out what is the trend on the daily chart. Because for the trend, for the daily chart to turn around, it would take a lot. Okay, for this trend that is happening right now, it would take a huge move to the downside for the market to start trending lower, essentially to be in a downtrend. So if you just pay attention to the daily chart and know that we're in an uptrend, then it's easier to trade off the 1 hour and the 4 hour chart, because all you look for is signs. So let's go on the 1 hour chart and notice that price broke this swing high right here. So because we're going in direction of the daily chart, then this is a good trade to take. So you want to go in the direction of the daily chart. So here, a swing point was broken from, that was March 28th, so I guess that was Friday, Thursday, and look, the market's starting to go up. Okay. Why? Because we're trading in the direction of the daily chart, and the daily chart is the most important, because that's what institutional traders look at. They don't look at a 1 hour chart. Sometimes I don't even think they even look at a 4 hour chart. They're looking at weekly and daily charts, and they have deep pockets. So if it turns against them 200 pips, which is nothing to them, they just add more positions. Okay. But unless you understand the concept of what is called top-down analysis, you first look at your daily chart, then you go to your 4 hour chart, then you go to the 1 hour chart. It becomes extremely difficult to trade. Okay. That's why I love this turnaround Tuesday, because you see this move down here? I know that we're in an uptrend on a daily chart, so I was very aggressive when I took this trade. You see, right there, because this is just turnaround Tuesday, and look what happened. It recovered. Now we're in the direction of the daily chart. So what we're essentially going to be learning how to do is recognizing trends on the daily chart, and then you go back to your 4 hour chart, and if the 4 hour chart is in the same direction as the daily chart, then it becomes really easy. All you have to worry is about the 1 hour chart. Okay? If you just follow this every day when you turn on your screen and you pick a pair and you think, all right, what is the daily chart doing? Very important, just go to the daily chart. Well, we're in an uptrend. Market broke a swing high. We're in an uptrend. And as long as it doesn't break this swing low, the market, which is around 142, then the market's still in an uptrend. If it breaks 142, then you have to get out. Then the market's in a downtrend. because this is a swing point. You have two candles to the right to the higher, two candles to the left to the higher. This makes it a swing point. Essentially, that's really all you need to do. And then what we do is we refine our skills. We start looking for, you can do counter trend trades against the daily chart, but you have to be careful. But you're consistently doing this. And let's go, this is the daily chart. We're in an uptrend, right? Now watch this. Okay. We're in an uptrend, this level. I just don't like this color too much. Let me just change. All right, from this period, March 4th till now, we're in an uptrend. So if I know that, I'll highlight that area, and then what I'll do is I go to the 1 hour chart. 1 second here. See this 1 hour chart? This is the highlighted area on the daily chart telling me to just go long when the market finds support. So this is what I do. I've got my stochastics indicators. Look here, right? Oversold, right? Here, oversold. Okay. And I have the 21, I use a 21 and a 14 stochastics indicator. Look at these areas you could have bought. Okay, and even down here. Why? Because you want to trade in the direction of the 4 hour of the daily chart. Okay. All right, now watch this. I mean, it's like this is 175 pips. This one here was about 163 pips. This one here. All right, we're getting close to the weekend. That was about a 93 pips. And now we had, and then we'll start doing this. You see this is a false break right here. We had market come down, it is a false break. Here's an entry right there. Okay, this becomes extremely easy to trade. Why? Because I'm trading in the direction of the daily chart, so I'm looking on the 1 hour chart where to get in. On the 1 hour chart, the market was in a downtrend on a 1 hour chart, but on the daily chart, we were in an uptrend, so that's why we were able to take these trades, counter trend trade from the 1 hour chart, and make a lot of money. Okay. So as long, and I like highlighting, I go to the daily chart, and if I, just highlighted any area that I know I'm in an uptrend, and then scroll down to the 1 hour chart and start finding entries. Here's another one here. Right there. Okay, here's another one here. You could take these counter trend trades because on the 1 hour chart, we're in a downtrend. You can still do that. But notice how the market, even when the market was in a downtrend on the 1 hour chart, it still recovered. Notice that? The market didn't want to stay down here. It kept on going up. So there was just so many trades in the direction of the daily chart. I place a lot of trades that are not in the trade room. In the trade room, I have to be careful. So I often what I do is call out a lot of trades. But the mentorship program, you're going to be able to get a lot more trades than in the trade room. Okay. Essentially, you'll be able to see these trade setups, and I will email people that are in the membership program get different emails because they get these trades. Okay. All these trades were sent to the membership program, mentorship program members. Okay, so this is what you get. So what we're going to do is the screenshots that you're going to be sending, you're going to send a lot of screenshots, and I'll tell you, the more screenshots that you find, that you send, and the more trade setups that you see, it just completely changes your trading. you look at the charts completely different. Your whole perception changes, whole perspective on the markets change. Your confidence goes through the roof, and you're a lot more relaxed about trading because you know where the trades are. So if we, let's say we only had turnaround Tuesday, that was the only trade that you knew how to do, right? So, and you knew that you were going to make money on that trade regardless. That would be so easy, just to wait till Tuesday, place your trade, you make money, and then you wait till next Tuesday. How stress-free can that be? But if you continually change in your trading style, if you're looking at your charts and you can't make heads or you can't understand what's going on, if you're chasing the market because you're sitting waiting for a trade that never happens and then you see the market take off and then you hop on board, then it's not fun. Okay? And it's not what professionals do. Professional traders, the problem with professional traders is not that they lose money, is that it's just how much are they going to make? That's their challenge. Are they going to make more today than yesterday? Or are they going to double the amount they did? That's their problem, which is not a problem really. It's just refining your skills and maximizing your profits. But you have to get over this hurdle of where the market is going. You have to clearly understand that if you don't know what the daily chart is doing, then it's difficult to trade. Okay? All right? Any questions so far? Okay? So, what I want you to do in the next few days is simply just take screenshots. And let's take, for example, you know, I've been talking about the USD Canadian, how we're in a downtrend, and that's long term. Because look, the swing point, this is a daily chart, the swing point was broken, so we're in a downtrend. So I'm not concerned about this. I get a lot of emails, are you still in the USD Canadian pair? I said, yes, look at the daily chart, we're in a downtrend. Okay, so unless it breaks 102.84, which is a swing point, we're still in a downtrend on this pair. Okay, so I'm waiting for the market to finish its retracement, its correction, so I can sell it again. Okay, but see the swing point here is broken, so we're technically in a downtrend, so the market will go back up, retest highs, and then turn around and go back down. This just gives us an opportunity to sell again. But here's a swing point, lower, lower, swing points are lower. So we're in a downtrend and it hasn't moved in the past 4 days. It really hasn't done anything. Okay? So what I want you to do is go on the daily chart and I want you to find trade setups. And you can do several things. So you can use the color code system. Here's 1, 2, 3 green candles followed by a color change candle. Right? And then stochastics indicator is overbought. Okay? So even though we're in an uptrend, this is a nice retracement, you know. And you can highlight the stochastics indicators telling us that the market's overbought, we have a color change candle, and you want to sell. And then when the markets find support, you want to buy it because we're in an uptrend. So here's a color change candle here, but the market didn't, it took several days before it confirmed that it was going to be in an uptrend. That's one thing you can do, using stochastics indicator for buy and sell signals, right? Do you pretty much know your candlestick patterns? Okay, great. So we're going to go over candlestick patterns. Okay, that's the next video I'm putting together of all the candlestick patterns. So I don't really want to go into this. I just wanted to give you an overview on what you need to do. And then when we meet next time, you'll have the videos. So you're going to find trade setups. Okay, and let me just give you a few of those now. Okay, let's go back. We're going to go to the 1 hour chart so we can do more. Okay, here we go. notice there's rundown. Now this is more scalping. We've gotten away from the daily chart where we're looking at directional bias and we're taking trades in the direction of the daily chart. This is different. We're doing scalping now, so we do a lot of counter trend trades or trades in the direction of the trend. We have 1, 2, 3 red candles, right? It's in a downtrend, right? Followed by a color change candle. So that's our signal to buy. Now, what I need 3 or 4 reasons to take a trade. Number one, stochastics indicators oversold on the 14 and 21. That's number one reason. Number two, I have a color change candle, right? And then number three, I take the trade 8 pips above the close of this candle. Now that's our scalp system. And this one went up 35 pips. All right, now that's one trade technique that we use. Okay, the color change candle, and then you trade 8 pips above this candle here, and you take the trade, and you have to get out before it hits these levels because this is all this is resistance. So you have to get out of this trade because we're in a downtrend. Okay. But when you see these trade setups on the 1 hour chart, make sure stochastics oversold on the 1421 when you see a color change candle, and it's safe to take this trade because it has to go up. It's just a retracement trade. Do you follow this? Is that making any sense? Right. So you need 3 or 4 reasons to take a trade. One, we have 3 consecutive bearish candles. Number two, we have a color change candle. Number three, stochastics oversold. Number four, it went up 4 pips, 8 pips above the close of this candle. So I had 4 reasons I could take this short trade. And then when it got up to these levels, I'm thinking, okay, I need reasons to sell. Well, it hit a previous, this was here, a previous support that was broken, turned to resistance. Very important. Stochastics is not quite up to 80, but it's still close. They're both up there. We have a color change candle because we had 1, 2, 3, 4 green candles followed by a color change candle, and all we need is for price to go 8 pips below this. All right, and there's your trade. Very mechanical. The 1 hour scalp system really works. It's very good. But unless you have 3 or 4 reasons to take a trade, I wouldn't take it. Okay. Now the candlestick patterns, let's go over that. Okay. You know the kangaroo tail, right? All right. Now kangaroo tail, you have to make sure. Let's see if we can find the kangaroo tail. All right. Kangaroo tail. The kangaroo tail needs to be bigger than the previous candle. Did you learn that from Walter by any chance? All right, so this candle needs to be, this is probably about the same length, but at least it's not smaller. You know, that was about 10 pips. And this, it is longer. So this is a color change candle. And notice the stochastics overbought. It is hitting at previous resistance level. Very important. You see this previous resistance? Okay, so we have a nice trade because we have a color change candle. And I would have probably taken this trade as soon as this candle closed because it was a previous resistance. And it was a kangaroo tail. And stochastics is overbought on both. But if you a more conservative approach, you wait for a color change candle and take the trade here. But it doesn't matter. The fact is you're entering a trade at a previous resistance. Okay? So everything is about support and resistance with trading. Always, always. Whether you do a counter trend trade, if you're going against the daily chart, that's okay. Just make sure you take those trades at those levels of support and resistance. So let's go over a few candlestick patterns that are important. Okay. Number one, we have a bullish engulfing candle right here. And there's several reasons to buy here because we have a bullish engulfing candle, because this candle here covered two candles at least. So these two candles are inside this one, so this is a bullish engulfing candle. So that's number one, and the markets went up. Okay, that's number one. Okay, then we have what is called this evening star pattern. Are you familiar with the evening star? Evening star. One candle goes up, and then we have like this doji, like this spinning top. See how it sticks out, and then the next one goes the opposite direction. Okay, this 3 candle pattern is called an evening star. This is a reversal pattern. Okay, so normally it's just as long as this candle, when it comes down, it's equal to the one going up, and then you have like this peak, you have a shooting star, you have a wick above this. This 3 candle combination is called an evening star, and it's a reversal pattern. Okay, so let me just write that down, evening star. So you'll have it. So you have evening stars and you have morning stars. Morning stars would be on the bottom, down here. Evening stars at the top. The morning star would be identical except upside down in reverse. Okay. Then we have tweezer tops, where the wicks are equal in length. Okay, see how the market went up, and then we had 2 wicks side by side. You notice that? Those are tweezer tops. So you have tweezer bottoms and tweezer tops. Evening star, tweezer tops or bottoms, and we have the kangaroo tail, right? Okay, so we're going to go through a lot of these, and again, don't worry, I'm just going to go over them, and it doesn't matter because we're going to go over them over and over and over. Okay, because you cannot learn this, you have to digest this, and it takes months to be able to do this over and over and then feel comfortable to the point where you don't even think. When you see setups, you just take them. Okay, so here we have a kangaroo tail, right? I like calling them exhaustion candles. I don't like calling them hammers or kangaroo tails. I like to call them exhaustion candles because that's what they are. The market is exhausted. Now, exhaustion candle. Number 1, it's an exhaustion candle or kangaroo tail. That's number 2. Number 2, it's bigger than the previous candle, right? Number 3, it's respecting previous resistance levels. Number 4, stochastics indicator is pretty much overbought. Okay, so you see all the things that I'm looking for? I'm looking for a lot of reasons to take this trade short. And if you just look at a candlestick pattern, it's not going to help you. Okay? And then I'm thinking, okay, let me short this because this is a kangaroo tail and it is bigger than the previous candle, and stochastic is up at these levels and it is hitting a previous resistance levels. That's enough for me to short it. Unfortunately, this happened in between sessions. This was at well, actually not unfortunate, actually very fortunate, because it happened at the close of the London session. Remember I talked about taking a trade into the opposite direction at the London session? End of London session, which is not ideal for you because that's like what? That's like 2 in the morning for you, I think. But there's an exhaustion candle, and then by the next day, London session, the market sold off. Okay? So there was a trade right there, 136 pips. All because I found 4 reasons to short it up at these levels. Stochastics overbought, kangaroo tail, bigger than the previous candle, it's respecting a previous resistance level. Sell it. But you'd have to wait like 8 hours before you make any money on this trade. It's okay as long as your stop loss is above there. Okay? Is this beginning to make sense? Great. Here is another trade setup. We have a string of bearish candles followed by a color change candle. Then the market gave us a kangaroo tail, which is bigger than this one, bigger than the previous candle. Stochastics oversold. So you need to qualify your trades, and you need to have a checklist, and you better have at least 4 or 5 reasons to take a trade. Okay, and there was your trade. You sold it up here at these levels, 151. Then you buy it back down here and make 100 pips. In hindsight, yes, it looks really easy. While you're actually taking the trade, it's very difficult. But if you have a checklist and you have a stop loss, then it becomes easy. Why? Because you've been practicing and practicing and reviewing, and basically you've been paying your dues for as long as you can, and now you can take these trades because you've qualified them. The whole thing is being able to qualify a trade. That is the key. If you cannot qualify a trade, you cannot take it. The trade is not there. Okay. So I will put together a candlestick tutorial. That was what I was going to do this weekend, and I got sidetracked. I put up two videos together, but I'll do that early tomorrow morning. But this is essentially what you need to start with: qualifying your trades. If you don't know where the market is going, then look at your daily chart. And if on the daily chart, let's look at the Euro Australian dollar on the daily chart and see where the market is heading. We're in a downtrend, right? So, but it's finding support at these levels, but we're still in a downtrend. So I would be looking at the 1 hour chart for places to sell. And I would have to have stochastics overbought. Like here, this was a good trade, and it went down, didn't go down a lot, but it did go down 50 pips. So if I know I'm in a downtrend, I wait for the market's overbought so I can sell. Okay. So around these levels, this is a resistance at 123.29, and I have to start looking for reasons why I should sell at these levels. Color change candle, kangaroo tail, stochastics overbought. Okay? Because you want to be taking trades in the direction of the daily chart. You can take counter trend trades, and we're going to get into that a lot, because if you wait for the market to just go in the direction of the trend for you to take the trade, you're going to miss out on a ton of trades. Like here, this is a counter trend trade, and the market went up over 100 pips. If you didn't take this trade because you didn't want to go against the trend, you would have missed out on a big trade. That's why we trade using color candle system, stochastics indicator. So you want to be taking trades in either direction. Okay? And we'll learn how to do that. But at the same time, if you're not sure where the market is going, then you do your top-down analysis, 4 hour, the daily chart, see what those two time frames are telling you, and it makes it a lot easier to trade off the 1 hour chart. Okay. And how are you doing so far? Okay. So essentially, I don't want to fry your brain with a lot of information. That is enough for today. We're going to get together, and let me just stop the recording.